Welcome to the Lend Academy podcast, episode number 180. This is your host, Peter Renton, founder of Lend Academy and co-founder of Lend It Fintech. Today's show is sponsored by Lend It Fintech USA 2019, the world's leading event in financial services innovation. It's coming up on April 8th and 9th, 2019 at Moscone West in San Francisco. We've recently opened registration as well as speaker applications. You can find out more by going to lendit.com/USA. Today on the show, we are talking about community banking. I'm delighted to welcome Kevin Tweddle. He is the Group EVP, Executive Vice President for Innovation and Financial Technology at the ICBA, the Independent Community Bankers of America. So I wanted to get Kevin on the show because you're seeing more and more community banks doing interesting things in fintech, and there's certainly challenges they face in really integrating with fintech. So I wanted to talk about these challenges. And we also talk about a lot about the different partnerships that are happening today, particularly in the marketplace lending space. We talk about the attitude of community bankers and how it's changed when it comes to fintech. And we talk about the changes needed for CRA. We talk about the fintech charter. Really interesting that they've started a fintech accelerator. So we talk about that and much more. It was a fascinating interview. Hope you enjoy the show. Welcome to the podcast, Kevin.
Thanks, Peter. Happy to be with you today.
Okay, so I like to get these things started by giving the listeners a little bit of context and some background about yourself. So why don't you just describe what you've done, particularly before you started at ICBA?
Sure, and it's always interesting to start with the folks that are involved in innovation. So my story is a little bit different than most in that I'm a CPA. So I started as a CPA. I worked in public accounting for about a decade, starting out doing a variety of companies, but certainly SEC banks, and did M&A work, audit work primarily. So started there. After public accounting, went on to become the CFO of the largest correspondent bank in the U.S. At the time, it was called the Bankers Bank, and really got a nice opportunity. 2 of those years, I was the CIO, so really de facto COO for that institution for about 5 years. After that, went to a fintech startup called Bank Intelligence. So they provided peer analysis and market analytics primarily for community banks. We were extremely successful for a few years, and we were acquired by Fiserv in 2007, and stayed on at Fiserv for about another decade, and kind of worked in the analytics division within their banking group there for about a dozen years. Did a short stint with a company called Novantas in New York City, and then joined ICBA in June of 2016, I believe.
Okay. So you've been at ICBA for a little while now, and you have an interesting role there. But before we get into that, I want to just talk about, this is the Independent Community Bankers Association. So obviously you're focused on community banks, but what does ICBA do exactly, and what's your mandate?
Yeah, so ICBA it stands for the Independent Community Bankers of America. So really our mission is, we're the nation's voice for community banks. So we're 100% laser focused on community banks. Really our mission is just to create and promote an environment where community banks flourish. And we do this really a 3-pronged approach. We do this through advocacy, so on behalf of our community banks, education, so providing education for all things for community banks, and certainly in my role on the innovation side, really bringing together, those educational aspects, the partnerships necessary to help those community banks flourish.
Okay, so then how many members do you have? How many community banks are part of your organization?
Yeah, so we represent certainly the interest of over 5,000, but about 2/3 of all the banks in the U.S. are members of the ICBA.
Okay, that's a pretty good that's a pretty good strike rate there.
Yeah, it's a fully geographic, really across the U.S. Pretty widespread.
Right. Okay. So then you joined, it sounds like, the ICBA with the idea of kind of bringing together a vision around fintech and helping community banks, with the very fast changing world that we live in today. So maybe tell us a little bit then about what your role is, particularly, I'd be interested to see how you view what you're doing in the context of, obviously what's going on in fintech.
Absolutely. And as I said, for really the focus for me is a new role, as you mentioned, for the ICBA, and really focusing on three areas: naturally, education, particularly for the community banking sector, and really, educating them on, what they should be doing in terms of innovation. What are the possibilities regarding fintech partnerships? So things of that nature. So doing that, obviously, social media, publications, conferences, and just interacting within the industry as well. Industry conferences, working with the regulatory bodies, really on that focus of education. Certainly communication, so really getting feedback from our community bankers, understanding their needs and and their challenges, where they need the most help, so to better frame where the opportunities lie, and then certainly partnerships. So, we have at ICBA, corporate member programs, preferred providers, but really want to laser focus in on the fintech side. What are the best fintech opportunities for our community banks? And Peter, that's actually just kind of a dual thing. It's not just for the community banks, it's also fintechs. And
sure,
really educating fintechs on, why working in the community banking industry could be very fruitful for them and very fulfilling for them. So, it's educating not just the banks, but also some of the fintechs, particularly the earlier stage fintechs that, may not know much about the community banking industry, or, used to going after the largest of banks. And we've had a lot of successful fintechs, within our, corporate membership group and preferred providers that have been very successful in working with community banks.
Sure. So I'm curious to, what's the attitude of your members today? I imagine if you're interfacing with them, they're going to be talking about, they're going to be more open to innovation. But I'm just curious about just the rank and file members, and they know that the technology is changing ever more rapidly. How do they feel about these changes, and is there much more openness like today maybe than there was like 2 or 3 years ago? Or what is the attitude?
No, absolutely, Peter. I think it's changed really dramatically over, say, the last 5 years. If you asked community bankers 5 years ago what they thought of fintech, they would just be, that would be viewed as an industry that was competing with them. And they were as competitors, where we take it now 5 years later, and it's really the complete opposite. I think community banks are becoming now more eager to partner with fintechs. And I think, again, that's a two-way street as well. I think fintechs are, much more eager to partner, with community banks. It's just a natural partnership given the strengths and weaknesses of each. I think from a banking perspective, they're just, innovation is not necessarily a core competence. Development and things of that nature, and running a development shop. And that's obviously something a fintech does extremely well. But, on the fintech side, they have they are great on the development and innovation side, but they don't know much about banking or really the regulatory system,
right? Particularly
in the U.S. So really, given those strengths and weaknesses, it's just really built for a natural partnership. And I really see we're just at the beginnings of that. I think it's really going to be a flourishing several years here for both fintechs and community banks as we look forward.
Sure. And so I was tooling around on your website and saw that you released a fintech strategy roadmap earlier this year. And so I'm curious about, maybe you can just tell the listeners what sort of encapsulate sort of some of the strategy pieces in that, and what are the biggest opportunities for community banks?
Yeah, so we wanted to start, obviously as part of our educational process is to really, kind of put a white paper out there on, what is the roadmap. So many of our community banks were going, Kevin, well, where do we start?
Right.
So we felt that the white paper was good to give them an overview of what the role of the community bank is, what the role of the fintech is, talk about a lot of the considerations, as a community bank, how should they, kind of organized for this innovation? How should the board be involved? What are some of the risk considerations? Particularly, we spent a lot of time in the white paper on, kind of the risk analysis, really a nice guideline for them, if they're just starting this process to say, all right, this needs to be how we need to go about it and get the management team together at the bank and, start putting the framework together so they can start, looking to partner with some of these fintech companies.
Right, sure. So I want to talk about a specific kind of partnership just for a minute. That's the marketplace lending space. It wasn't, there was actually big news at the very, very first Lend It event in 2013 that was announced. We had 2 community banks were coming onto the Lending Club platform, investing in the loans. Since then, there's obviously been a variety of banks across many different platforms, and including some community bank consortiums as well. So what is your view on marketplace lending? Is this, obviously there's a history already in this space, but is this one of the ways that you're talking to your members about partnering with fintechs?
It is, and as you kind of alluded to there, Peter, this is probably one of the most mature areas of fintech. It was probably, if we look back, probably the earliest and one of the first areas of focus in fintech overall. And really, in line with the comments I've said, I think a lot of particularly community banks are looking at marketplace lenders, say today, almost as part of a loan diversification strategy,
right.
As much as anything. That's one manner in which they want to look at it. And also just to create a more efficient loan platform for whatever type of lending that they may do in particular. And as you know, this whole marketplace lending area is not just about small business and commercial lending. There's a variety of different, construction lending in a variety of different areas. And we're seeing that expand exponentially there. But it's really about partnership. One thing I would note, Peter, that's a little bit of a distinction if you look at just kind of the pure marketplace lender, kind of the non-bank folks, is they definitely will take more risk than your average community bank. So you're saying, well, why aren't community banks really getting into it as much as at this point? It's just really about risk tolerance as much as anything.
Right. And even the banks that are participating, they're participating at the lower risk end of the spectrum. That's
exactly.
There's virtually none that I know of that go all the way down to the subprime.
And I think it's been that in that sense, Peter, it's been really good for the marketplace, because it's really serving a wider diversity of consumers and businesses out there, where banks would typically not lend to someone there may be a higher risk than they would have a tolerance for. The marketplace lenders or the non-bank lenders can step in and have opportunities for those that wouldn't qualify otherwise. So
right.
I think it's been good for the overall consumer and business. But I think we'll see just as a matter of risk tolerance. But I think we're going to see more and more partnerships between community banks and marketplace lenders going forward. It's taken a while, but I think we're starting to get there.
Right. Yeah, that makes sense. I'd agree with that. So then what about other areas of fintech? What are some of the other areas where community banks are looking to partner with fintechs?
Yeah, and I think just some of the biggest areas are I was reading a graphic the other day. I think 72% of all of fintechs are in the payments and lending business.
Yep.
So, obviously we talked about lending already being the more mature areas, but I think payments, now that we're moving, closer to real-time payments and faster payments, I think there's a lot of unique opportunities there. And, a lot of early stage fintechs really providing solutions in that area. So I think that's going to be an interesting dynamic to watch in the whole P2P space in particular. So I think that's certainly an area. I mean, I just still, we talk about data and analytics a lot, but really, to me, there's just not been a whole lot done there. So, and particularly at the community bank level, I don't think the solution set has been as robust. I expect that to improve dramatically here over the next 5 years. So I think we're going to see a lot more really better use cases in that area where, the community banks are looking just like any business for four things. How can they use this information like data and analytics to grow revenue, to, become more efficient, to mitigate risk, or really to have provide a better customer experience or a better understanding of their customer base. So as long as fintech is meeting one or more of those four needs, I think the community banks are going to get more and more involved in it. Right.
Okay. So I want to switch gears a little bit and talk about the Community Reinvestment Act. And this has been a somewhat of a hot topic this year. And there's been a lot of talk about the need for modernizing the act. It was written in the 70s, didn't contemplate a digital world where there's apps on phones, and that's how many people interact with their bank. I'd be curious from your perspective, from the community bankers, what do they want to see? How do they want to see the CRA modernized?
Yeah, and I think we certainly agree that it does need to be modernized. And there's, a number of things, that are in consideration. So we've been very active in the comments that we've been providing to the regulators. But, just some of the key areas that we're looking at, relative to that, we think that the bank really needs to define the market area. I just don't know if that can be fully metric based. I know they're looking at maybe is there a metric that we can judge CRA on, but I think that's an ongoing discussion, going to be pretty difficult to do. But I just think the bank needs to be involved in defining its area, and rather than the regulators defining it for them. Mm-hmm. So, and again, trying to do it in a more systematic way. I think we're all trying to do that, and just trying to find a way to prevent any inconsistencies or gaming of the system, if you will. I think that's the concern about having maybe a one metric approach, is that there will always be a way to get around that or game the system on that. But we just want to create something that's consistent, something that's driven by the institution, and just something that creates more consistency and more transparency to help the examination process. So we're, I think, marching forward in that direction with some of our comments, and pretty confident that we'll get something a much more modernized and useful version of CRA going forward. Mm-hmm. Certainly much needed.
Right. Yeah, for sure. And then what about the fintech charter? The OCC has said, the new head of the OCC is quite bullish on this, and I hear it's going to be fairly soon. We're going to see the first applications supposedly that are going to come through. What's the official stance of the ICBA on that?
That one's pretty simple for us. I mean, it's really all about a level playing field. So, our take is really, if there's a fintech that wants to be a bank, then go ahead and get a banking charter. Right. There's no need for a special purpose charter or, very much like the ALC. I mean, just go ahead and just went ahead and got an OCC charter. And I think that's the way to do it. We're not, against fintechs getting into space. We just want to make sure whoever it's a fintech or whoever it is, it's just a level playing field, just like any other financial institution has to, or any other bank has to go through.
Mm-hmm. Okay, fair enough. So it's obvious, that banking has moved away from, a branch-centric model where, particularly in urban areas where it's there's a lot more of a digital experience. People are interacting on their phone more often than they're going to their branch. But I'm curious because, community banks is obviously there's a wide variety of bank CEOs and different types of banks. And, I read about them in American Banker and elsewhere that there are some that are just doing a phenomenal job in innovating in this, with this sort of in mind. So maybe you could give a couple of examples of community banks that are really, preparing themselves for the next decade and really making a big push in the digital experience.
Yeah, and just one thing I would say on the digital experience is, community banking is really about relationship banking, and even you may want to take that as far as niche banking. So the most successful, community banks out there have done that well, and I view just as we become new innovations come out. We've got more digital solutions out there. I think community banking will remain kind of that, high tech, high touch banking out there. And I think, using technology to help deepen already strong relationships and enhance, the types of relationships that are, within their niche and their communities and, the relationships that they've built at their community bank. So I think that's kind of where that's headed. Just some good examples, just some, relative to the digital side. There's a bank up in Wisconsin called River Valley Bank. And, several years ago now, they actually formed a separately branded, I guess you'd call it their own challenger bank, if you will, kind of an online digital bank. And they separately branded it. It's just an interesting example. And they've been very successful with that and just having their own community bank brand at River Valley and then having, Incredible Bank as their online bank, kind of more of a national, deposit taking entity primarily. So I just think that's a sign of, a bank doing something innovative, not an easy thing to do, but I'm hearing more and more banks kind of looking at that type of approach and trying to figure out a way to do that. So I just think, a lot of even, the local communities, you can still have that local community feel, but there may be some things, whether it's deposit taking or maybe, lending niches out there that you can maybe take on a broader scale outside of your initial communities and, something that you can replicate and do well, in a larger geographic area. So.
Right. Yeah, that makes, and I feel from my perspective, I mean, community banks, their strength is their connection to the local communities, but
yep.
it also can be their weakness if, something happens where there's, one major employer that is in a town and, I feel like these towns don't want to lose their bank and, if you can certainly broaden and diversify nationwide. And I mean, and there are other examples I know of as well of community banks that have some kind of national online presence. And to me, it makes a lot of sense. And I think
you look at Peter, just someone like a Live Oak Bank, where they're very local in the Wilmington, North Carolina area, but they have national niche lending markets for, doctors and dentists, for pharmacies, things of that nature. They just choose niches and take that nationwide, but they're still very active in their local community in Wilmington. So
right.
Just another example, but a little different in that they're kind of taking the lending on the national side and doing more on that, from that perspective.
Right,
So,
and I think they also spun out a technology company out of that bank, if I'm not mistaken. So
they have they spun out Encino, which I would argue is probably one of the most successful bank technology or solution spinoffs, in history. Right. It's not just a spinoff; it's a very successful one, and it just shows. I think that's another thing relative to fintech. We're seeing a lot more banks maybe looking to do something like that. You got an NBKC bank in Kansas City, just kind of forming accelerators, and it's really taken on the persona of the institution. They want to bank technology companies and the principles of technology companies and, make that their niche in their marketplace. So it's really, and there's several other banks across the country that are starting to look at that. And I think, it's just an interesting, new development out there. And I think we'll be seeing more and more of that.
Right. Sure. Yeah. So speaking of accelerators, you recently started your own accelerator, and I was reading the news, fairly recently, and you decided to set it up in Arkansas, which wasn't the first place I thought of when I was thinking about a fintech accelerator. So why don't you tell us a little bit about the thinking, firstly, on the whole idea of starting a fintech accelerator, and then secondly, why Arkansas?
Sure, absolutely. So, we looked at, one of the things we were talking with our community banks is how can we, as an association that serves community banks, how can we help our community bank membership? Many of our community banks don't have the resources to do, what they would like to from an innovation perspective. And obviously there's a lot of incubators, labs, and these accelerators. So we kind of studied that marketplace and say, you know what, I think, if we were involved in an accelerator, we can take maybe some of these earlier stage fintechs and get community banks more involved directly. Many of them are involved, today with their core processors, which is, again, it's good relationship. They're working with their core processors. But, just beyond that, maybe there are some options that community banks can look at, more of a direct relationship and solve their very specific needs. We looked at the accelerator as the option to do that. And there's a lot of accelerators already out there, but we've been, again, as an association, to make sure it's an accelerator that is focused on community bank specific needs. So we're talking with our membership and really identifying, here's some solutions that, problems that we would like to solve, and then start looking for folks that will develop those specific solutions for them. So that's a unique thing that we can do. And also, again, as an association, the folks that we have involved in our accelerator can be quite unique as well. We've got very strong relationships with the regulatory authorities. We've got, strong relationships with the core processors that, we'd love to have them involved in this process. So we can bring in, a unique group of folks to make it really, if I were a fintech starting all over again, I'd want to go through our process because, you look at the kind of folks that we can bring to the table as an association. And also, you have 2/3 of the banks in the U.S. that, potential go-to-market partners that we're going to, be involved with. Obviously, we'll be investing in these companies as well. So, we'll have, input and certainly want them to be successful if they come through our program with the Venture Center. So that's kind of why we did the accelerator. You say, well, why, how in the world did you end up in Little Rock, Arkansas? Well, as we studied folks, we again don't have the folks that could run an accelerator here internally. So we were looking to partner with someone to help in our accelerator program. And that's how we ended up in Little Rock. And, we're partnering with the Venture Center in Little Rock because we felt they were the most experienced out there as it comes to accelerator. They're in, they worked very closely with one of the core processors with FIS. And they've been doing this now for 4 years. So I think their experience was a big part of that. Another big part of it is they really understood community banking and understood community bank needs, which is really important to us, as part of that process. And again, they just have tremendous expertise. I think their leadership is excellent. Their team is excellent. We got very comfortable with them. And, I think some of those factors really that's how we landed there in Little Rock.
Okay. So then have you selected your first cohort yet? I know this is fairly recent. So if I'm just thinking about it, if there's someone listening who runs a fintech and this might be attractive to them, and what's the process for applying and who are you looking for? Obviously, you're looking for companies looking specifically at working with community banks, but is there other things specific you're looking for?
Yeah, no, it's a great question. So really, we're in process. We announced this on October 31st on Halloween. Don't know if that's a good or bad omen, but that's just how it turned out. But no, we've received, Peter, in our first, a little over a month, we received just under 200 applications. So we're real excited about that. And really our first year, that was well beyond our expectations. So that's exciting. So we're trying to narrow that down. We'd like to ideally end up with about 10 candidates out of that, our accelerator process, which starts on January 7th and will run through the end of March. And at the end of that program, the candidates will actually get an opportunity to present their wares at our annual conference, where we'll likely have, probably 1,300 bankers there, to present. So it's a wonderful opportunity. And as you mentioned, I mentioned some of the unique traits about what makes this unique. I think, as an association doing this, we just, again, have that broad outreach, and we can really bring in some, really good subject matter expertise, for the fintechs. The other unique thing that we offer, even post-accelerator, is just the go-to-market opportunity. We've got banks involved in the selection. We have a selection committee made up of community bankers that are going to help, ensure that the fintechs that we're selecting are community bank focused and solving problems that they have. But also, once we run through the accelerator, we want to bring in a number of our banks, throughout that process so they can, listen to it, identify, see if this is something they would want, and, potential subsequent users of these solutions after the accelerator. So it's kind of unique if you come out of the program as a fintech in our accelerator program, that just it's really truly what it is meant to be as an accelerator. It really accelerates the growth of that fintech, not just by honing their solution with the subject matter expertise and identifying partnerships really within, from other entities, maybe core processors or others, getting in front of the regulators, so they're aware of what they're doing. And then just have that go to market, building their brand, in a short period of time to really, the hardest part of a fintech was really getting started, getting those first 10, 15, 20 clients. Mm-hmm. And then, things grow dramatically from there. And we think we give them the best chance, our program.
Right. Yep. Okay. So we're just about out of time, I'm afraid. But before I let you go, one last question here. And obviously, you're bullish, I'm sure, on the future for community banks. I mean, not everybody is. So what do you think it's going to look like in 5 or 10 years' time? What will be different in the future when it comes to community banking?
Yeah, I think it's going to be this community bank is really becoming this high-tech, high-touch experience. I think the relationships will remain very strong for these community banks, whether it be their niche, their communities, and surrounding markets there. I think, the way that technological advances in the digital movement is just really just going to help them enhance those relationships. So I think that's going to continue as well. And just you've seen just kind of the way these things have evolved, the community bank versus the larger bank or non-bank, that competition's been around for, centuries.
Right.
And, the same advantages are there. I think the community banks have the ability to be nimble and more creative and innovative in a faster way than some of the larger entities have been able to do it. And they certainly, they don't have, like B of A, a $12 billion technology budget, which will probably, it's probably more than all the community banks combined, frankly. But just the ability to be nimble. And, I don't see there's anything earth-shattering in the industry that, changes the advantage one way or the other. I mean, banking is still going to be banking. There'll still be the need for deposits, a need for loans, things of that nature, and that will continue. And I'm bullish on the community banks because I think the strength of their relationships is going to help them as the consumers and businesses go through the changes, the rapid pace of change in this digital transformation. So, one of the things I've talked about, Peter, before is, can you fully digitize trust? It's an interesting debate and question. I argue it with my kids all the time just to get their perspectives, which is quite different from me. But, I just think everybody's on a different spectrum from 0 to 100, right? Maybe there's someone who's fully comfortable with a full digital experience without talking to a human being or anything. Others on the opposite end, but most are going to fall somewhere in between. So I think that's going to be the interesting thing to watch as this digital transformation continues and the rapid pace of change continues. I mean, I think the dynamics of banking are going to remain the same in terms of making loans, taking in deposits, generating fee income revenue streams that are beneficial to consumers and businesses. And I just like the strength of the community bank relationship and their ability to be nimble. That's going to really translate to their success in the future.
Okay, well, that is quite likely. I think it's a fascinating space and one that I think I'll be watching closely. And I really appreciate you coming on the show today, Kevin.
Great. I appreciate your time, Peter. Happy to talk to you about community banking.
Okay.
Happy to do it anytime.
Okay. See you later. It's an interesting thing that Kevin talked about trust there. And, That really is I think one of the core benefits or the core offerings of community banks, and the fact that they're part of their community. People can actually sit down and talk with someone face to face. Now, not everyone wants to do that, so it's important that they have digital offerings as well. But having that kind of nexus in the community, that where they are trusted, they are visible. I think community banks are going to be around for a long, long time, decades, centuries. If the banking system keeps chugging along the way it is, I think you're going to see community banks just remain a very important part of this. But it's going to look different, as Kevin said, and I think those companies, those banks that are forward-thinking, I think will be rewarded in the long run. Anyway, on that note, I will sign off. But before I do, I want to wish everybody all the very best this holiday season. This is our last recording of 2018. We will be back with you next year with some great guests. I very much appreciate you listening, not just to this episode, but throughout the year. And I wish you all the best for the holiday season and for 2019. And I'll catch you next time. Bye. Today's show was sponsored by Lend It Fintech USA 2019, the world's leading event in financial services innovation. It's coming up on April 8th through 9th, 2019 at Moscone West in San Francisco. Registration is now open, and we're also taking speaker applications. You can find out more by going to lendit.com/USA.